Hi there. In this video, I'm going to show you how to use the property investment calculator on this website. I'm going to run you through a hypothetical scenario that uh, resembles real life as much as possible. So first, I'm going to click in a property name. Let's assume I'm looking at buying Regalia Service Apartments. And I'm looking at a one bedroom unit which is 530,000 ringgit. The size of this unit is 560 square feet. Let's assume I'm going to put a 30% down payment on this property and my interest rate with the bank is 4.5%. I'm taking a 30-year loan. I don't have quick rent to pay as this is a condominium. My assessment, I know it to be 660 ringgit per year. If you're unsure of the assessment fee, you can take the fair rental rate of the property, multiply it by 12 and multiply that by 6%. You will generally get an overestimate, but that's okay. Maintenance fees is 33 cents. Sinking fund, 2 cents. I plan to renovate this place, do it up for about 50,000 ringgit. And my miscellaneous maintenance cost, this is for stuff like plumbing, fixing leaks, etc. So I'm going to put aside 700 ringgit every year for this. I can expect to fetch a rent of 2,300 ringgit for this unit. And the vacancy rate, this is basically how long the unit will be vacant every year. So I expect it to be vacant 10% of the time, meaning every year for about 1.2 months, I expect the unit to have no tenants. The average yearly capital appreciation is how much I expect the value of the property to go up every year. Regalia has been, over the last 5 years, has been increasing at a rate of 11.6%, but I'm going to be conservative and I'm going to say I expect an 8% capital appreciation every year. Now, let's calculate this. These are the results. My gross rental yield is 5.21%. My net operating income is 1,424 ringgit and 89 cents. Now this basically means that my rent will not cover my expenses. So every year I'm going to have to fork out this amount. Total equity after 1 year, if I were to sell the apartment after 1 year, I would make a loss of 19,804 ringgit. That's about a loss of about 9.48%. But if I sold the property after 5 years, I would make a nearly 100% profit. Now this profit is net of my down payment. Notice my down payment that I had put was 159,000 plus I spent 50,000 on renovations. So essentially I've spent 209,000. After 5 years, when I sell this condo, I make an additional 207,658 ringgit. Not too bad. These are my lawyer's fees for the sales and purchase agreement preparation. This is how much I would have to pay for the stamp duty. That's 9,900 ringgit. The loan agreement stamp duty would be 1,855 ringgit. And this is my monthly repayments to the bank, 1,879 ringgit. Now I can play around with this calculator a little. Let's assume I want to make sure that my net operating income is positive. What I could do is I could perhaps increase my down payment to 35%, and let's recalculate. Now you see, after increasing my down payment, my net income every year is 186 ringgit. That's positive. So I'm not losing any money on my cash flow. But this would affect my ROI. So instead of making a near 100% return on investment in 5 years, I'm making 90%. Assuming I want my net operating income to go up further, I could make fine-tune adjustments. I could increase my rental rate a little bit. Perhaps I could negotiate a better interest rate with the bank and get 4.35. I could try um, increasing the duration of the loan. Perhaps I'm eligible for 35 years. Now, if you look, I'm making a positive income of 2,484 ringgit. My rental ROI is much better. I've, however, sacrificed my my returns on investment by a few percentage points. So you could play, this is how you can play around with the calculator to adjust these figures to the kind of returns that you would like to have.